Good day. Welcome to the monthly scoreboard summary video. We share all the fact sheet links in this email and also in the interactive PDF that accompanies this email. We hope this quick summary video provides some insight and understanding as to how we measure performance and how, from a financial planning perspective, advisors can and should view the models. We shared our market summary in the recent Market Smarts email, so let's start with the asset class return data. You'll notice that we specifically use rolling return data and not calendar year return numbers, as this talks back to our own strategies and the fact that you should measure each of the models over their respective rolling periods. Global bonds have done exceptionally well as an asset class over the recent 1 year, which is expected given firstly the weaker rand, and global equities also have done very well over the recent 1 year. What we understand and appreciate from rolling return data is the base effect and how this could potentially impact the return numbers. Now, when we move on then to our own model portfolios, we look at the steady growth portfolio, for instance, where we can see that we've managed to deliver well in excess of the CPI number. Remember that this model aims to at least deliver CPI 90% of the time. We're also pleased to report that both the guarded growth and optimal growth models over their relevant return periods managed to do well and actually managed to return in excess of CPI. Now, looking at the guarded growth model, you'll notice that we aim to once again, with 90% probability, try and achieve CPI. This means the downside or risk element is that 10% of the time you could potentially not achieve this. From all the rolling 5-year data points on this chart, you'll notice only one period where we did not achieve that primary target of CPI. This chart is also very useful in showing that preserving capital against inflation is in fact possible over the rolling 5-year period, another one of the 4 investment pillars. No changes were made to any of the outcomes-based model portfolios during the month of May. Now let's move on then to our income model portfolios. We look firstly at the income produced for the stable income and the inflation protected. We can also then measure this against what the income generated by some of the CISA categories. The stable income continues to deliver great results, both in terms of capital and income generation, as can be seen from this chart. Our balanced income model portfolio aims to at least achieve a cash return over rolling 5-year periods, 90% of the time. And if we were to look at the actual rand cents outcome of this model portfolio over the recent 5 years, the model did well in delivering that monetary outcome. You would have had well in excess of what cash would have yielded over this period. Though changes to the balanced income will only be made in June, we would like to inform you that we have done some great research in terms of living annuities, the withdrawal rates, ruin probabilities, and sequence risk. We will share the changes, the new portfolio construction, as well as the research in our June scoreboard email. Please remember that the PDF that accompanies this video is interactive, so please go and click on any of those buttons to download the relevant fact sheets. Again, this is a very useful way to see that if you want, for instance, a CIS fund for a client with a shorter investment term, the ideal fund would, for instance, be or could be the Amity BCI Diversified Income Fund. While mentioning perhaps this fund, I'd like to again highlight that there are outcomes-based model portfolios, the steady growth, guarded growth, and optimal growth models. And then these strategies are duplicated in the CIS funds, the Amity BCI Steady Growth Fund, the Amity BCI Prudent Fund, and the Amity BCI Managed Select Fund. The 3 other CIS funds you will notice here are used for specific reasons. So, for instance, the Amity BCI Diversified Income Fund is managed by Matrix Fund Managers. Then we outsource the Amity BCI Equity Income Fund to Marriott, and our own Amity BCI Global Diversified Fund, which is managed by our analyst team and the investment committee members, is our offshore fund, which is mainly built for ease of implementing our best global views on the various lists. Thank you for watching this month's monthly scoreboard video. If you have any questions on any of the funds or models, please get in touch.